In the recently unfolded financial tale, CapitaLand Ascott Trust, CLAS, painted a brighter picture in its third-quarter earnings, boasting a 13% hike in gross profits compared to the same scene last year. This financial uptick was directed by a revenue crescendo that managed to outplay the rising operating and financing costs, as announced by the CLAS conductors on a sunny Monday, October 30th. The profit melody had a duo of lead performers. About 44% of the profit tunes were belted out by the management contracts of serviced residences and hotels, while the remaining 56% came from a stable rhythm of longer-stay properties, master leases, and management contracts with a guaranteed minimum income score. Now, let's talk about the crowd puller, the revenue per available unit, RevPAU, which danced up by 17% to a lively 154 Singapore dollar tune, pirouetting past the pre-COVID levels. This was choreographed by the unyielding demand for lodging, with key markets tapping to a strong growth beat. Singapore and the UK continued their stellar performance, outdoing the pre-COVID RevPAU levels, while the stages in Japan, Australia, and the US also buzzed with robust quarterly growth, pushing the RevPAU levels to rise above the pre-COVID mark on a pro forma basis. This act didn't invite the properties that exited the stage between 2019 and 2022. As the curtain fell on September, the ensemble of net asset value per stapled security struck a chord at 1 Singapore dollar and 12 cents. Though half the foreign currency assets were in harmony, a minor dissonance of 0.7% loss was felt due to foreign exchange tremors on the gross profit over the 9-month act. The financial orchestrators at CLAS also struck a note on financing flexibility. With the gearing tuning at 35.2%, they revealed a debt headroom of about a cool 2.3 billion Singapore dollars before hitting the high note of 50% aggregate leverage. The debt-to-assets rhythm played at 52.4%, and the average debt maturity orchestrated a 3.7-year act. In the debt scene of 2023, refinancing and repayment took the center stage, keeping the financial health in a hearty tune. With an effective borrowing cost humming at a low 2.4% and a high note of 83% debt on fixed rates as of September 30, 2023, the debt narrative was well composed. As CLAS managers orchestrated the finale, they emphasized that with a disciplined portfolio retuning and an upbeat operational performance, the stage is set for navigating through the higher-for-longer interest rate symphony. With gearing and property valuations expected to keep the melody flowing, CLAS stands on a solid stage, ready to perform amidst the changing financial climates. As a Singaporean investor, orchestrating your investment portfolio with a tune of real estate buzz can offer a diversified melody. Here's how you might approach the CapitaLand Ascott Trust, CLAS, score. Understanding the composition. Before tuning into the CLAS investment melody, understanding its business model is key. Explore how CLAS makes its revenue through management contracts of serviced residences, hotels, and long-term leases. Being well-versed with their revenue streams can offer you a clearer insight into their performance notes. Analyzing past performances, delve into the past financial performances, including the recent 13% rise in gross profit and the 17% growth in revenue per available unit, RevPAU. Understanding the rhythm of past performances can provide a baseline tune for future expectations. Debt harmony. Assess CLAS's debt management, including its gearing ratio, net debt to net assets ratio, and effective borrowing cost. The low effective borrowing cost of 2.4% and a high proportion of debt on fixed rates at 83% as of September 30, 2023, reflect a well-composed debt management score. Market performance and sector growth. Tune into the broader market performance and the sector growth, especially in the key markets where CLAS has its properties. The post-pandemic recovery tune, particularly in Singapore, the UK, Japan, Australia, and the US, can play a significant role in CLAS's performance rhythm. Future score. Look for forecasts and analyst ratings on CLAS. The management's positive outlook on navigating the higher-for-longer interest rate environment is a noteworthy tune. However, having a wider perspective through various analyst insights can provide a more holistic view. Dividend melody. Evaluate the dividend yield and payout history. Consistent dividend payouts can provide a steady income stream, making your investment melody more harmonious. Risk assessment. Every investment concert has its share of risks. Assess the impact of foreign exchange rates, interest rate changes, and geopolitical tremors on CLAS's performance. Engage a financial conductor. If the financial orchestra seems overwhelming, engaging a financial advisor can help in orchestrating a well-balanced investment score with CLAS. Regular performance reviews. Keep a regular tab on CLAS's financial performances, market announcements, and sector developments to ensure your investment remains in harmony with your financial goals. By orchestrating a well-researched and informed approach, Singaporean investors can aim to strike the right chords with their investment in CapitaLand Ascott Trust, tuning their portfolio towards a harmonious financial melody. If you found this video helpful, please hit that like button. It really helps us to understand what kind of content you want to see more of. And don't forget to subscribe. Here at the Investing Iguana, we're dedicated to helping you navigate your financial journey with confidence and clarity. And guess what? There's plenty more where this came from. Stay tuned for our upcoming videos, where we'll tackle other interesting financial topics like the best investment strategies, understanding the stock market, and how to make your money work harder for you. As always, we're thrilled to have you as part of our Investing Iguana community. Your support helps us keep producing free content like this. Remember, every like, share, and subscribe goes a long way. Thanks for joining us today. Keep investing, keep growing, and we'll see you in the next video. Bye for now.